Hey guys, Steve here from the turtlefollower.com with the strategy session for Monday, September 15th, 2014. I just wanted to take a quick look at the market and then we'll go over the three positions we exited this morning. And then we'll look at any positions that are remaining in the portfolio as well as the watch list real quick. Don't anticipate this being a long video, but I can talk for a while, I guess. So we'll see how that works out. So S&P 500, we've talked about this channel coming back into the support area of the 50-day moving average, the previous highs from this last consolidation, and it looks like that's exactly what happened. We came in and now we bounced off that level and ended up closing higher on the day in the S&P. So you could see how we have the longer term channel and then this shorter term pullback channel that we have going on right now, and the previous highs from this consolidation. So like I said, we came back in. Now let's see if we bounce from here and potentially break out over, I would say, 1990. That would confirm that we are breaking this downtrend line, as well as also this high from, I guess this was Thursday. And then eventually the next ultimate test would be a close above 2000. We didn't really get that close, so we'll see if we can get that coming up. So time will tell basically if we get that breakout or if we revert back and break down and move towards the 50-day and eventually that 1940 level. That would be, if we broke the 50-day, that would be the next level I would be looking at, would be somewhere around 1950, 1940. But for right now, we're still in this controlled pullback. Let's see what happens in the next few days. So we're going to go over a couple positions we exited today. First one being APD. We exited at the open, and as usual, it looks like it came right back into the support area. Okay, so you could see back in here, the low, it moved down to this 126.82. Sure enough, today, bounced low, was right around 126.82. We exited at the open at 127.75 on the break below this 128.65, which was also this low and this high. These highs right in here and this low. Okay, so we were able to trail our stop up. Sure enough, got stopped out. This potentially could reverse, move back to the downtrend line, and then eventually maybe put in a lower high and eventually break down below the 126.92 level. But for right now, that 126.92 level appears to be supporting. We did break the downtrend line. We broke our previous low of 126.80 or 128.68. So taking the exit, not a bad play. Let's just see how it plays out. Maybe it sets up again, maybe not. We'll have to figure that one out. But like I said, right now it did bounce significantly off that 126.92 level. EQR, this one was down 0.88% today. We're using 64.08 as our stop. That was the previous low from back here on 8.1. So you could see here, this is an obvious example of a stock that's been broken. All right, the uptrend was well intact. We were using this support line, this trend line, 50-day moving average, had high volume breakdown right here. Tried to hold that 64 level on the 11th, and sure enough, on the 12th, had another significant breakdown, causing us to exit the position. So this is an example of when a closing stop may not be the most advantageous type of stop that you could use, but it got us out of the position. We were able to trail our stops up. So yes, it was a loss, but it was not as big of a loss as it would have been if we maybe continued to hold the position waiting for it to rally. Because I'll be honest, this stock looks like something that could easily, in the next day or so, test $60. So that would be one that would move from 67 to 60 in about a week, and that's a significant breakdown. Look here on the weekly chart, you could see as well that last week's move, you haven't seen that in a while, right? So that's just something we can get away from. It's not doing what we want. It's time to exit and look for something else. The other one we exited this morning was Tesoro, and again, this was one that was a marginal break on the 12th. We were using the close back from here, from, again, the 11th of August. So 61.77. So 61.77 Stock closed below the 50-day moving average for the first time in a while, and we exited today at the open. Sure enough, it was another one that moved higher as the day went on and closed at 62.06. I think we exited right around 61.40. So this one, again, this is something that for right now, it did break the trend line. It broke the 50-day. Looking here at the weekly chart, maybe it's bouncing off this consolidation area. Maybe it's not. But for right now, I think there's a lot of other stuff that's working and working better. And for us to have this significant type of pullback, essentially from 67 to 61 in a matter of 5 days, that's a lot of selling to be happening. It hasn't happened in a while. Hasn't happened before, maybe back in here. So it's just another one that I would feel more comfortable if we were out of and found another entry point than to hold on to it and worry about it losing another 4 or 5% overnight. All right, so those are the ones we exited. The ones we are still in: Apple down 0.03%. This one moved higher on some strong pre-orders of the iPhone 6 and the 6 Plus. Ended up closing down in a day. This could mark a temporary top for Apple. You could see on the weekly chart it's well above the channel, and it's toying with the all-time highs back here from 2012. So let's see how this acts. Let's see if we can maybe consolidate. I think that would be good for the stock if we could put in, say, a couple weeks of sideways action here. But you could see that $100 level, or actually $103 level, is proving to be some significant resistance. We were able to move our stop to 97.90. So any breakdown here under 97.90 would be an exit in the stock. ADM up 0.3%. Again, this one just continues to work. Oops. So you could see right now, let's take this off this channel. That clears it up a little bit. So you can see for right now, we're well above this 49.12, which would potentially become our new stop level. You can see here that 50-day moving average is continuing to move higher. So maybe another week or so of trading up in this $50 level, we'd be able to move that stop up. Right now, our stop is 48.16, above the trend line, above 50-day moving average. We are coming into some resistance at the weekly channel. So let's see, we want to make sure we're tightening up stops as quick as possible on these. So if we do get a breakdown, we can realize some significant gains in these. AMT down 0.91%. This is another one that, similar to Tesoro and EQR, that last week was a rough week. All right, we basically went from 100 down to 95. Now I still think that we potentially consolidate in this area, so I wouldn't be surprised to see a bounce off this 94 level. But for right now, if that's the case, we will exit the trade if we get a breakdown below that. We have broken trend line. We have broken the 50-day moving average. The only thing left in our way, or keeping us in the position, is this 94 level. If we break that, we'll exit and take the gains that we've made in this trade. Disney up 0.46. This one just continues to consolidate. Okay. You can see here, it's essentially just consolidating in this level. I think what's happening is it's waiting for that 50-day. It's waiting for the trend line to come into play. So another couple weeks of sideways action, an eventual breakout over 91, and then we'll be able to move our stop to this 88.70. Expedia down 1.61%. Again, it was consolidating. Today it finally broke down below that consolidation. So a lot of our stocks are appearing to be weaker than normal, which is something that you just kind of keep on the back burner, keep in the back of your head, so that when you do have the opportunity to take an exit from a trade, you just exit and you don't even think about it. But for right now, like I said, we are still holding this lower channel line. Okay, so that's important, and we haven't even tested the 50-day moving average since back here on the 27th of May. So let's see if we can now bounce higher. If so, that will provide us a nice new stop level. If we can break out over 88, then we can actually move our stop to this 85.11. So I'm going to actually remove this drawing for right now, just so it does not confuse us, because we are unsure of where that stop is going to be at this point. Fidelity, again, look at last week, basically down in a straight line, coming back, testing that 50-day moving average. We were able to move our stop up to 56.40. So let's see what happens when we get there. All right, 50-day moving average is here, trend line's here, so that's definitely, that 56 area is definitely important. So if we want to stay long, and I think it has to hold that level. GD up 0.36%. Again, this one just continues its move higher. All right, so right now we're still using 114.48 as our stop. I think we're going to eventually move our next stop to the highs of this consolidation, which is right around here at 121, but we're waiting for that 50-day moving average to move up. H&R Block down 0.4%. You can see here what I talk about in I think it was maybe Thursday in the strategy session, that this could potentially just move sideways right here like it did back in the middle of July. Move sideways, allow that 50-day moving average to come down, and just as it would with a breakout or a stock that was in a longer term uptrend, this could provide resistance and then eventually a breakdown below 31.97. So this, if you were going to short, or if you wanted to short, this one is potentially setting up a little short play for you. And again, wait for that 50-day moving average to come in, see if it continues to consolidate in this area. 50-day moving average will come down, and then sure enough, what will happen is you'll get that red breakdown, and that would be your trigger to get short if you wanted to, something like that. All right, so that would give you a nice tight stop over here, 32.51. So see what happens. For right now, we are long. We are long that stock, and we are holding at 32. So if we can stay above 32, we'll stay long. If not, we again will gladly take an exit from the position. LUV down 0.3%. Another topping tail in this one, similar to what it had on Friday. So this one may be getting tired. I think at some point, I don't know when it's going to happen, but at some point LUV has to consolidate. There's no doubt about it. I mean, we're getting to the point where this is so parabolic that you need some kind of consolidation to work off those overbought conditions, set up some stop levels, and maybe this is going to be the high and this 31 level is going to be the low of that consolidation. I'm not sure. But our stop is down here 29.38, and we're a long way off from moving our stop to 31.70. So looks like, this should be in our portfolio for a while, depending on how this reacts. But it definitely needs some consolidation to set up another move higher. And the last one, RSG, just continues to consolidate in that box. 50-day and trend line are slowly moving up to meet. Right now, 37.50 is the stop. We could probably actually move that stop up again to the highs of this consolidation, which is now 38.11. So we'll move it to there. We'll just call it 38. And we'll make this gray to show the progression of our trailing stops. And we'll make this red. So, as I said before, I'm not a huge fan of using the tops of consolidations as stops, but sure enough, if that's what has to be done and it meets our criteria, I will use them, especially when we are so far off from being able to trail that stop anywhere else based on this consolidation. Because if that was the case and we weren't using this 38 level, the next level I would see would be 38 or 39. So I'd like to just move the stop, take a little risk off the table, especially the market's acting a little squirrely. Our positions seem to be acting a little weird as well, so I'd rather just let it see where it goes and move that stop up. So here's the stocks that we're in, or that are in our watch list. DPS bouncing off that consolidation. You can see what's happening. That 50-day moving average is trailing higher, and the trend line support is right in play. So I think another couple days or weeks of sideways movement and a break over that 63.50 would set up good. Hess up 1%, again bouncing off the bottom of that channel or consolidation, sideways channel. So again, move over 103 would be the trigger on that one. Win up 0.81%, again right at the bottom of the consolidation area, trend line support, and the 50-day. So there's a lot of support coming into play right here on WIN. So if it doesn't bounce here, it's most likely not going to bounce. WMB up 0.77. Again, right in the middle of that consolidation. APC up 0.74, bouncing off the bottom of that consolidation. LRCX continues to mark time right below that 72.50 level. So we're still waiting for that breakout. It's not happening yet. Home Depot potentially identifying the bottom of its new consolidation. You can see here, though, one thing to be aware of is this downtrend line if you're long this. So you want to make sure that we eventually break that downtrend line and potentially would want to test that 93.50 area. MS, Morgan Stanley. All right, so here we go. We got a breakout on this one. All right, minimal, but it is a breakout. So if you want to take this stock, again, because of our position sizing or our portfolio allocation, we're not going to take the stock. But nice weekly breakout. Now you have to consolidate on the daily. You got to move higher. All right, so the only issue I see with this is you set your stop here at 33.75, say. That's a valid position size, but you're well above 33 and you're well above 32.50 for the trend line. So you're well above these other two criteria I use. The only other spot you would want to set would be 31.40, but that puts you way too wide. So this one's, it's a good looking setup, but it's not great. It's not one that I feel like I need to trade, so we're going to pass on that one. But anyone else who wants to maybe trade options or a little bit shorter of a time frame, you're more than welcome to it. ABT continues to move sideways. 3M continues to move sideways. CenturyLink right at the 50-day moving average. RHI basically right off that trend line. All right, so let's see if we can get that break over 51.50. FedEx putting in some higher prices. It looks like this may have earnings the 17th before, so tomorrow would be the last day it would trade before earnings. So I wouldn't, even if it broke out tomorrow, I wouldn't be taking that. And you could see here 41.77 is my current stop. As you know, if you watch the weekend update, I am actually long this stock, and I'm using 147.77 as my exit. Oh boy. And the last one, BK up 0.05. This would be a setup that I would want to take. All right, if you can get a little bit higher of maybe a little bit higher of a close, say over 40, I would then go in, buy a position, set my stop at 38.25, and that's the setup. Okay, because now I'm below the 50-day. I'm below the trend line support. If you want to be a little bit more aggressive with it, you're more than welcome to leave your stop at 31.77. And then, sure enough, you would still have to wait for that 50-day and trend line support to break. But that's the kind of setup I'd rather see more than MS. All right, MS, like I said, a little bit too far away from 50-day and trend line for me to be comfortable. But, everybody trades a little differently. So like I said, if that's something you're into, you're more than welcome to it. But that's it for tonight, guys. Please make sure to follow me, StockTwits, Twitter, Google+. If you liked anything, or if you liked the video, please hit the like button below. Leave a comment, and if you have any questions. And we'll catch you tomorrow for the next strategy session. We're going to actually not have a trade school video tomorrow, and we will do the free trade and the anatomy of a trade for Wednesday, Thursday. All right. Have a great day, guys. Take care.